All right, so let's see how perpetual FIFO works. I set these charts out so they make sense to me. So I have the purchases over here, and you're going to have to refer to the notes to look at the chart that I am referring to, because I do not have room to write it all down and, do this too. So we're looking at step 1 under FIFO, and you'll notice that on this side are the purchases. You've got the date that something happened. You have purchases over here. This will be where we put the cost of goods sold, which we'll see how that works. And then the balance is over here. So on and where it's perpetual, we have to go by the dates everything happened. So the first date is a purchase on February 1st. I've put that in. We bought 3 units at $10 each for a total inventory cost to date of $30. I bring that right over here because that is the balance. That's all we've got. Okay, so the next thing that happens is on the 5th. Okay, so on February 5th, and it says we sold 2 units. Okay, so we sold 2 units. We know we did that, so we can say we sold 2 units. Which ones did we sell? Well, we only have this one layer of inventory, so we must have sold 2 of the ones we bought at 10. So that's our cost of goods sold right now is 20. Okay, then we have to figure out, well, what's our new balance? And we had 3, we sold 2, we've got 1 left, and it's at 10. So that's our inventory balance. Okay, now what happens? We did the 1st, we did the 5th, now we go to the 11th. Okay, on the 11th, we buy some more inventory. We buy 8 units at $12 each, and so we've added $96 worth of inventory. So now our new balance is going to be, we had this layer, we just added 8 at 12 for 96. So we have total inventory now of 106, and we've got 9 units. Now you can add it like this, or you can set up, like a whole different little section for it if you want. But basically, this is our current balance now. We've got 2 layers. We got this layer and that layer. 1 at 10, 8 at 12. Okay, so that was the 11th. Now we have to see what's our next date. Oh, it's the 15th. And what happened on the 15th? On the 15th, we sold 6 units. Now, the question is, under FIFO, which units did we sell? First in, first out. We sold all of those, all 1 of them. So that gives us, we sold 1 at 10 for 10. We sold 6 units altogether. Okay, so we have to account for 5 more. The other 5 must have come from here, from this layer. So we sold 5 at 12, which gives us, on the 15th, we sold 5 at 12, 60. All right, so that gives us the 6 units we sold, and we sold, $70 worth of inventory. Now we have to figure out what's our inventory balance. Okay, so this whole layer is gone. We sold that one, and so 8 minus the 5 that we just sold gives us an ending inventory of 3 units of 12, okay, for 36. You have to do a couple of these to have them, and after a while they might start to make sense, but you just have to be very procedured about it. Okay, so then our next date, let's see, we did the 15th. Are we getting towards the end of this? Ah, yes, the 20th. What happens then? On the 20th, we bought 5 units at 14. So we added to our inventory 5 at 14. That means we added $70 of inventory. So now we have for the 3 at 12. We just bought 5 at 14. Okay, so that's the 70. So now our total inventory is that right? 36? Oh, it's 106 again. Okay, and we've got 8 units altogether. Is that right? Yes. All right, now we're down to the last date, the 20th, the 26th. And here we sell 3 units. All right, so now the question is, which ones did we sell? Well, we first in, first out, we sold these guys. So we sold 3 of our units at 12, okay, for 36. And then we figure out, well, what have we got left? Well, we sold all of these are gone. So our ending inventory is going to be 5 at 14. That doesn't look really good. 5 at 14, or $70 worth of inventory. So this is our ending inventory, perpetual life, FIFO, first in, first out. Okay, so I would suggest, just doing a couple of those to see how it works, or work this one through on your own. So I'm going to just, let's see, we should probably figure out so our ending inventory is 70. Then usually problems will ask you a couple of embarrassing questions. They want to know, well, gee, what's the cost of goods sold? Because we need that for our financial statements, and that's you just want to know what that is. So there's a couple of ways you can do that. You can add up and say, yeah, okay, we 20 plus 70 plus the 36, that would give us 126 for cost of goods sold. All right. Or the other way to do it is you start out, if you look at the initial table, you can see how much you had available for sale, which was 196, okay, the total cost of the inventory. And then you can say, and we've got this much left, so you can go the available for sale less your ending inventory also will give you your cost of goods sold. The other question they usually ask is, what is the gross profit? And gross profit is going to be your sales revenue, which is actually given on the chart of 220. Okay, so your gross profit is going to be the 220 sales revenue less your cost of goods sold. Okay, and you can figure out your gross profit. Okay, so that is it for FIFO. Our next adventure will be LIFO.